Trump made tariff popular. Know how it is different from duty and tax, what applies in India. It is nighttime. Headlines about international trade are flashing on the mobile screen. Someone is saying that Trump is talking about tariffs again. Someone is saying this will shake the market. And someone still cannot understand what the difference is between tariff, duty, tax, and levy. The fear is that when the world's biggest economies change trade rules, the impact does not remain limited to big industrialists alone. It can reach the common person's pocket, shop, job, and future as well. And this is where curiosity is born. What exactly is this thing called tariff, which Donald Trump turned from a political slogan into a policy weapon? Over the past some time, the word tariff has not remained limited to economics books. It has reached election platforms, business conferences, stock market discussions, and social media debates. Donald Trump has long presented tariffs as a major weapon of trade policy. In April 2nd, 2025, the White House announced a reciprocal tariff program, and after that, tariff arrangements and trade negotiations with different countries kept making headlines. In India's case too, the official US-India joint statement in February 2nd, 2026 mentioned an 18% reciprocal tariff rate. So a line like 50% tariff on India cannot be considered correct in every situation. The current official record talks about an 18% rate along with the possibility of further adjustment on some goods. This is where the confusion begins. Usually, people think tax, duty, and tariff are the same thing, because in all three, money goes to the government and all three affect some cost in one way or another. But in the language of economics and law, their roles are slightly different. If this difference is understood in simple language, then even the big headlines of international trade suddenly start looking very clear. And this is the most important part of this story, because misunderstanding words often becomes misunderstanding the entire news. First of all, let us talk about tax. Tax is a broad word. According to the widely used definition of the IMF and OECD, tax is a compulsory payment made to the government, meaning it is not voluntary. The government imposes tax on income, goods, services, transactions, property, and many other bases in order to raise revenue. In simple language, tax is the big umbrella under which different kinds of direct and indirect taxes come. That means every tariff can be a tax, but not every tax is a tariff. Now think of an everyday scene. If you earn a salary, then income tax comes into the picture. If you buy something, then the effect of an indirect tax like GST is included in the price. If you buy property, fill fuel, a company earns profit, or a financial transaction happens, the role of tax can come up under different laws. This means tax is not only something related to crossing borders, it is imposed inside the country as well, on a person's income, on a company's activity, and on consumption too. Now let us come to duty. Duty is generally the charge that the government imposes on certain kinds of goods or transactions, and in the context of trade or production, this word is used very often. In many places, duty is seen as a category of indirect tax. But here, one fine point needs to be understood. The context of every duty is not the same. Some duties have been connected with production, some with import-export, and some with specific notified goods. So the word duty is narrower than tax, but in practical language, it is a word very closely linked to trade and goods. In India, as soon as duty is discussed, two major words come up: excise duty and customs duty. In earlier times, excise duty was a big concept on domestic manufacturing, but after GST came, the structure of indirect taxation changed quite a lot. The official material of the GST Council and 𝐟𝐸𝐥 documents show that after GST was implemented, the central excise levy did not completely vanish in a general sense, but it certainly became very limited, and now it mainly applies to some selected goods like specified petroleum products and tobacco products. That means today, saying excise duty is charged on every domestically manufactured good in India does not show the correct picture. This has changed a lot compared to earlier times. So when someone says that excise duty means the tax imposed on everything made at the domestic level, that is only half the truth. The correct point is that, in the historical sense, excise duty was an indirect tax linked to domestic manufacture, but after GST, its scope has become very limited. That is why in today's Indian tax reality, GST is the much bigger word, while excise has become a narrower and selected area concept. It is very important to understand this difference, otherwise something read from old notes may fit wrongly into today's policy. Now understand customs duty. Customs duty is the tax or duty that is imposed on the movement of goods across international borders, especially on imports. Under the 𝐟𝐸𝐥 framework and the legal structure of the Customs Act, 1962, a customs-related levy is imposed on imported goods in India. In simple language, when goods coming to India from abroad, customs duty or import duty may be imposed on them. This is the point where things like border, shipment, documentation, valuation, classification, and rate become important. Now comes tariff, the word that gained the most political popularity. The World Trade Organization says very clearly that customs duties imposed on merchandise imports are called tariffs. Britannica also describes a tariff as a tax levied on goods crossing national boundaries, which is generally imposed by the importing country. That means in practical trade, language, tariff, and customs duty appear to stand very close to each other in many contexts. So when Trump talks about tariffs, it often means a border tax imposed on imported goods or a customs duty type measure. This is where the biggest confusion gets cleared. Duty can be a broad trade-related word, but tariff specifically refers to a customs type charge imposed on international trade, especially on imports. In other words, all tariffs can be understood within the category of duties, but not all duties are tariffs. And tax is an even bigger umbrella term than both of these, which can include income tax, GST, property-related taxes, transaction taxes, and trade-related duties. Now the question comes, why does any government impose a tariff at all? The answer is not just revenue. According to the WTO's explanation, tariffs make imported goods comparatively more expensive and give locally produced goods a price advantage. That is why tariffs are seen not only as a collection tool, but also as a trade policy tool. Governments earn revenue from tariffs, protect domestic industry, manage import flow, and sometimes also use them to create geopolitical pressure. This is where Donald Trump's politics becomes easier to understand. Trump connected tariffs not just with an economic instrument, but with the language of national strength, trade fairness, and domestic manufacturing revival. The USTR's 2026 trade policy agenda and the White House records of tariff actions show that reciprocal tariffs were justified as a response to persistent trade deficits and non-reciprocal practices. That means here tariff did not remain just a tax that makes imported products expensive, but also became a tool of negotiation pressure, political messaging, and strategic leverage. But there is another side to the story as well. Imposing tariffs can make imported goods expensive, and that can affect domestic consumers, supply chains, and businesses too. If a company brings raw material from abroad, its cost can rise. If a retailer sells imported finished goods, its pricing can change. If one country retaliates, exports can also be affected. So a tariff is not always a simple patriotic measure. Many times it brings both domestic protection and domestic pain together. That is why tariffs get support as well as criticism. Now let us also understand the word levy, because this too keeps coming up again and again in news debates. Levy is generally a generic word which means to impose some charge, tax, cess, or duty. That means levy itself is not always a separate tax category, but can also refer to the act of imposition. When a law says that the government shall levy a duty or levy a tax, it means that the charge is being applied. So it would not be correct to understand levy as the exact alternative of tariff, duty, or tax. Sometimes it works like an umbrella verb and sometimes like a noun showing some specific charge. Now let us return to India. In India, goods coming from abroad generally attract customs duty or import duty. In the 𝐼𝐨𝐥 framework, imported goods may attract, along with basic customs duty, some other applicable charges too, such as IGST and, depending on the product, other duties or cess-like components. This means that, in common language, people call the entire import tax burden custom duty, but in the actual invoice or customs calculation, the structure can be slightly layered. So saying that in India, goods coming from outside attract import duty or customs duty is broadly correct, but its exact amount depends on the product category, valuation, and applicable law. Take a simple example. If America imposes a tariff on some goods going from India, then at the US border it will be an import-related tax measure. In the same way, if India imposes a border tax on goods coming from America, then in the Indian context it will be called customs duty or import duty. That is why, in media language, the headlines on both sides are seen with different words, but in border tax logic, they stand very close to each other. The difference is mostly one of legal framework, national terminology, and policy messaging. One more important point here. Inside India, GST applies on sale, while at the border, a customs-related levy can apply to imported goods. So if an imported product enters the Indian market, it does not remain just a story of one border charge. After that, the domestic tax structure can also get added to its price. That is why the consumer feels the impact of many layers in the final shelf price, but in the headline hears only tariff or duty. The real system is far more detailed than the headline. So now let us make the full picture clear. Tax is the biggest word, duty is smaller than that and is a goods or trade linked word. Tariff is even more specific, which generally refers to customs duty imposed on imported goods. Levy is a general word of imposition, which can refer both to the act and the label of applying charges like tax, duty or cess. And in India, today's practical reality is that for imported goods, customs duty/import duty terminology is more relevant, while in the domestic indirect tax structure, GST is dominant, and excise duty is now mostly confined to limited goods. That is why Trump may have made tariff popular, but the concept itself is not new. What is new is that now ordinary people too, on hearing this word, have started thinking about their country's economy, local industry, inflation, jobs, and international relations. Earlier, tariff used to sound like a word belonging to economists and customs officers. Now it has become part of dinner table discussion. And perhaps this is the biggest story of global trade politics. That the word, which was once locked inside files, has now reached elections, diplomacy, and household budgets. So the next time you hear that some country has increased tariffs, reduced duty, carried out tax reform, or imposed a new levy, instead of getting nervous, remember this. Every tariff is a tax, but not every tax is a tariff. Not every duty is a tariff, but a tariff is often found in the world of customs duty. And in India, the charge that is discussed the most on goods coming from abroad is generally called customs duty or import duty.
This video has taught you something new. Or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.